privacy, security. Privacy, security. Feels like we've been here before. Well, this is perhaps the defining debate of our generation. It has been for some time, but it's possibly more relevant now for crypto than it ever has been. As we collectively try to figure out the implications of everything that's been happening with Tornado Cash, it is clear that this story is a big deal. It's been a couple of weeks since the US Office of Foreign Assets Control, the OFAC, called the crypto mixer a threat to US national security. We are still wrestling with what that means for mixers and for crypto in general. So today, let's focus in on that and let's ask more of the questions about what is next for crypto as a result of this. We'll get to the task of that with one of crypto's best experts shortly. Meanwhile, other firms like Uniswap are taking steps to try and avoid a similar fate. We'll have more details on what exactly that is about. Plus, Australia's new rules as crypto consumers down under get more guidance on the opportunities are now available to them. What is next for them? We need to talk about Tornado Cash. It's been 2 weeks since the crypto mixer was basically banned by US authorities, user transactions blocked because it allegedly breached rules on money laundering. The move prompted all sorts of hand-wringing in crypto. There are worries now about the implications for privacy, the implications for crypto sovereignty, and of course, the use of mixers in particular by criminals or other potential bad actors. At the weekend, the arrest of a coder on the open source protocol used by Tornado Cash prompted protests in the Netherlands. Crypto firms are, of course, now wondering whether they could be investigated next and how much responsibility they ultimately hold for what their users do. So let's dig into all of this a little bit more with Benjamin Stanny from Matrix Port. Ben, thanks for talking to us and helping us try to get to the bottom of all this. Can I just get your reaction initially to what's been happening over the last couple of weeks with Tornado Cash, with what it's been doing to crypto and of course to crypto prices?
So I think the ban from OFAC, the Office of Foreign Assets Control in the US, on Tornado Cash has been widely seen as an event of many people in the crypto industry of an attack towards privacy. Tornado Cash, as most of the audience would know, is a mixer. It allows for obfuscating the trace of the crypto assets that you're using the mixer for. And with all privacy tools, that obviously is very, very well used by people with nefarious actions. That's where the ban and the regulators want to come in and step in. Now, privacy itself, however, is something that we in the crypto industry have set out. And with the arrest that you mentioned of somebody that contributed to an open source protocol, and the analogy that a lot of people in the crypto industry were using is you wouldn't blame the person who made the knife for a murder. So why are you putting the guy who put the open source code for Tornado Cash behind bars?
Listen, from an industry point of view, how concerning is this in terms of its implications for mixers? And is this likely to have a chilling effect at all on the broader crypto sector?
It sparked a huge debate in terms of where we are on the decentralization scale, and also where we are in terms of the permissionless nature and the censorship resistance. So what is good to see here is that Tornado Cash, the protocol itself, is operating as intended. The front ends is where the problem were, and where a lot of the players that are supporting these front ends were very quick and in most cases had no choice but to comply with US regulation and just blacklisting any addresses that were in touch with Tornado Cash. Now that has led to interesting edge cases where in what people call the dusting attack is somebody withdrew small amounts from Tornado Cash and send them randomly to publicly known Ethereum addresses of major people in the industry. And so these people now technically would have to report to OFAC that they received funds from Tornado Cash, even though they actively didn't do anything and probably didn't even have the intent of receiving these funds. In essence, it will have this chilling effect because of that uncertainty, and there's not many developers out there that want to risk their lives to contribute to open source.
Yeah, so what happens next then as far as all this is concerned? What does it mean for investors and what does it mean for everyone else?
So what we've had is this debate about censorship resistance, decentralization, and we've had major people in the industry talking about their various levels of commitments. It's understandable that these PRIG protocols, they first have to comply with their front ends blocking anything from Tornado Cash, because otherwise they are targeted by OFAC too. But it also it depends on where you draw the line in the sand, and we've realized that even decentralized protocols have a lot of centralized attack vectors. We had Alchemy and Fura, for example. They blocked access to Tornado Cash. GitHub blocked the grants for Tornado Cash. We had like Discord, for example, that shut down the Tornado Cash Discord organization. So it makes it difficult for DAOs to operate, because a lot of the protocols and services that they're using, they're still on centralized platforms or with centralized attack vectors. And that obviously also raises the questions then, where are we going with Ethereum, this chain itself? Like if you have players like Coinbase or Lido that have a massive amount of the staked Ethereum, they in theory would have the capability of censoring transactions. And that's why there was a debate about to what level we are actually decentralized.
Great, all right, fantastic. Ben, thanks so much for that. Benjamin Stanley from Matrixport, fascinating as always. Listening to all of that raises questions about what's next from these sanctions. The decentralized exchange Uniswap has now taken action. It's blocked over 250 wallet addresses linked to illicit financial activities on its front end. Uniswap has been partnering with TRM Labs to screen and monitor suspicious financial activities. That includes those related to Tornado Cash. Sun Huang of Taiwan-based fiat to crypto exchange XREX has told Forkast that such blocks can actually help fight financial crimes, but exchanges need to keep upgrading their screening tools to avoid blocking innocent users. Over in Australia, plans for establishing a regulatory framework for crypto have been revealed. Prime Minister Anthony Albanese's Treasury has promised to take what it calls a more serious approach than the previous government. So what are the priorities, and is the approach the new government is taking really so different? Forkast Lachlan Keller has this report.
The Australian Treasury Department says it's ready to start a consultation on a framework allowing consumers to participate in the market while better protecting them. The first step will be carrying out research it calls token mapping. Token mapping involves charting the types and underlying code of the digital assets available in the market. Jonathan Miller of crypto exchange Kraken told Forkast that token mapping was already included in the original consultation paper, and he's not sure if being elevated to being a top priority is a good thing.
The regulatory framework we have at the moment for AML-CTF, anti-money laundering and counter-terrorism financing legislation in Australia for crypto is excellent, and really that's it's evident in the fact that we have so many exchanges and functional businesses in Australia, including innovative blockchain-based and crypto-based startups. So the token mapping exercise is definitely welcome, that we're moving ahead with some of the regulatory recommendations, but as to whether or not this is the right step forward, I think remains to be seen. We wait the consultation paper that is expected later in the year on this.
Miller says he hopes the consultative approach will continue throughout the process, and that the speed of developments in the space is kept in mind.
When we look to other regimes, the focus has been on AML-CTF. I think anyone would understand and identify that crypto is moving at an incredibly fast pace. The idea that you can map tokens may be questionable. And you look to regimes like Japan, where the regulator has full and ultimate control over which tokens people can trade, and I don't think that's a great outcome. We want to make sure that Australia remains an open and essentially flexible framework.
Meanwhile, earlier this month, the Reserve Bank of Australia said that its research into a central bank digital currency would include a limited scale pilot. So how do the RBA's plans fit with the government's moves on regulation?
Only in recent months have they woken up to the fact that CBDCs might be a good idea, and fundamentally stablecoins or digital money that uses blockchain. Let's face it, that's what we're talking about here. Digital money that using a superior infrastructure, which is open source, permissionless blockchain, is the future. At this point in time, all we see is a walled garden from them. I don't necessarily think that's innovative. I'm not even certain that central bank issued digital currencies are necessary for us to embrace, fundamentally the better technology.
The Treasury says a public consultation paper on token mapping will be released soon. In Melbourne, Australia, I'm Lachlan Keller. Forecast.
And finally, crypto lender Celsius's bankruptcy is getting even more messy. Yet another group of claimants are now fighting to get their money back. One of them has told Forkast that their money was trapped in a, quote, withhold account. That is a type of account for users in the US that could not use custody accounts for regulatory reasons in order to withdraw deposits. Withhold accounts were frozen when Celsius halted all withdrawals back in June. However, according to CoinDesk, just $14.5 million of roughly $12 billion in assets held by Celsius when withdrawals were halted is currently held in these accounts. Celsius still has a $1.2 billion hole, of course, in its balance sheet. All right, that's it from us. Like and subscribe to this video for more content like it. Let us know your thoughts on what's happening in the comments.